Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. We're coming to you live from AWS reInvent in Las Vegas, Nevada. Joining me for this segment, we have Saman Farr, Vice President of Financial Services Tech at AWS, to discuss the adoption of digital assets and how firms are leveraging Amazon-managed blockchain. Saman, it's great to have you with us. Welcome to Trade Talks.
Thank you very much. Thanks for having me.
And to get started, explain to us what digital assets are. It's a very broad term. Aren't stocks, for example, already digital?
So, for the purposes of this context, digital assets are assets that are tokenized and put on a blockchain. Of course, stocks are electronically traded and so forth, but these are actually placed on a blockchain for access.
Mm-hmm. What's the advantage of doing it this way?
Well, number. It's actually since the beginning of time, three of the big things that have been important for financial services has been really the velocity of money. How fast can it go from A to B? The second is to be able to have assets together so that they can interact with each other. And the third is the ability to automate things. So by putting them on the blockchain, we get the instant, really speed of light transmission of funds from A to B, which becomes important. And then the aspect of having them together is that we have bonds, equities, other assets, and they're not segregated and isolated, they're on the same infrastructure. And the third one is using the facility of smart contracts on blockchains. We can program common business processes. So business logic is not done manually or programmed in a set of disparate systems and can execute very rapidly and easily close to where the data is.
What are some of the key adoption trends that you're seeing across financial services institutions today?
Yeah, there's really three drivers that we're seeing. One of them is the use of for custody and for exchanges, and we see that quite a bit. The second one is in cross-border payments, and this is an example of where that velocity of the money becomes important, especially when you see interest rates being what they are today, of 5% or so. It's not just getting the funds from the sender to the receiver quickly so the receiver can use them, it's that 5% accrues and adds up quite a bit, if they're kept 2 days in transit, for example. So that becomes important. And then the third trend that we see is the digitization of assets. So these are, whether they're things like bonds or money market funds or real estate, these are being placed on blockchains, either as directly as tradable assets, something like a native asset like Bitcoin, or as proxies for real world assets. That's the other thing that
What about trends when it comes to financial services startups?
Well, regarding financial services startups, they're really across the board on this. And it's very an active area of both innovating in blockchain protocols and also in innovating on the access methods to these things, like for example authentication and layer 2 chains, and there's really across the ecosystem is where we see the startups.
How are institutions holding these digital assets, both for themselves and for customers?
Yeah, well, obviously the first thing is that everything is subject to regulation, and it's very careful to be compliant with the regulations. There are really two ways that institutions are going in. One is going with third-party providers for custody services. So these may be, for example, Coinbase or Fidelity and other companies. And another one is to go with technology-oriented providers, such as Fireblocks.
Right. Early experiments in 2017 with digital assets, they leveraged various private blockchains. However, these faced a lot of challenges when it came to proof of concept to production due to lack of compatibility with other digital assets. I mean, interoperability is key. What's different this time?
Yeah, it's quite different now, because what's happened since 2017 to now is that really Ethereum has emerged as a compatibility backbone. And what we see is various applications in all these categories that we're speaking of using Ethereum, and there's layer 2 chains which are more specialized and have various advantages in different dimensions, all also using Ethereum as a communication backbone with bridges to Ethereum. So in this way we have an ecosystem where there's a compatibility through standards and bridges across the different aspects that are using it.
How is AWS helping customers solve these challenges and continue to innovate within the digital asset space?
Yeah, that's a good question. Really, at AWS, what we focus on is helping customers with what we call the undifferentiated heavy lifting. So this is the heavy lifting that our customer needs to do that doesn't help differentiate them to their own customers. So what we do is we provide key management service, KMS, and Nitro Enclaves for the protection of data, and a variety of analytic services at AWS. And then going beyond that, what we provide is Amazon Managed Blockchain, which focuses on two areas. One of these is the undifferentiated heavy lifting of managing and operating nodes in blockchain. So we support Ethereum, Bitcoin, and just yesterday we announced the public preview of Polygon. So customers don't need to operate these node farms in order to interact with them. That's one aspect. The other part is the data, because applications and uses of blockchain are highly oriented towards the analysis of data to see what's going on the blockchain so they can make decisions and act on those. So for this, we offer Amazon Managed Blockchain Query, which is really a set of simple APIs that customers can call to get things like, for example, account balances, transaction histories from the blockchain, and all of that stuff is done underneath the covers for them so they can focus on building their own applications.
So what does the future of digital assets look like?
It's interesting. It's when you look at the technologies where they are today and at how fast they're maturing, the sort of a reasonable prediction of it, at least in my view, is that we're seeing a world where everything is going to be digitized. So as an analogy, when we have friends, we don't say, these are the friends that I meet physically for a coffee. These are the friends that I only text. These are the friends that I call. These are the ones I DM in social media. They're, well, friends, and I use all of these various ways to contact my friends depending on who they are. Similarly, the direction on digital assets is that all assets are become digitized on the blockchain. So some of them might be like Bitcoin natively there, other ones through proxies and digital twins. So for example, real estate, this watch, a car, all of these things, consumers increasingly want to interact with the world in a digital way and not distinguish between what's real world and not. So these proxies for these real world assets on the blockchain allow the ecosystem of applications to interact with these assets and be able to trade in them, lend them, buy them, sell them, all really through your phone.
So digitization of real world assets really sounds like the next phase.
Yes, the combination of real world assets together with, really not distinguishing between those and the native digital assets.
All right, Simon, we appreciate the insight. Thanks for joining us on Trade Talks. And thanks for joining me from reInvent. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.